Good to see everyone. Everyone's ready. We'll get started. Welcome. And again, as always, if you want to take a deeper dive into the original supply-demand strategy, structure, location analysis, and all that, you can always just click on the link in the chat. It'll take you to the page you see on the screen. And that's a free workshop, of course. Okay, moving on. We are going to start to talk about supply, demand, and options. Anybody in our group here today trade options? Any options traders with us today? Who trades options? Okay. Options are fantastic. And again, if once we get into the live charts here in a moment, we can look at any market you like, and I'll tie in options as we go through the session. But now, one of the reasons now when we talk about the strategy, right? Let's just back up a little bit. So for those that are kind of new to these sessions, you can always go back and watch more recordings. But the original supply-demand strategy, I developed that on the trading floor of the Chicago Mercantile Exchange many years ago, and it really is all about just pure structure and location analysis, right? And I know some of you have been through that with me, with the team. And what we're doing is, right, using price and price alone to quantify the all the markets, supply and demand. Okay, stocks, futures, forex, options, crypto, real estate, bonds, energies, metals, commodities, whatever. Doesn't matter. The market doesn't matter, right? We're simply focusing on our supply, demand, and fair value, right? Looking at the charts to identify those areas. And to map it all out, we use our structure location analysis. So we use and apply the same strategy rules to any and all asset classes, and really for any market purpose, meaning day trading, swing trading, longer term investing. It really doesn't matter. And of course, if you have a market you want to take a look at, just put it in the chat, and we should be able to look at it. Now, I am going to tie in options. I can't. Well, let's start talking about options for a minute. Options are certainly one of my favorite asset classes and have been. I trade options, and primarily started out my career trading the forex market, specifically the Japanese yen, for a while, and then tons and tons of futures, and then of course options mainly on equity index markets. Now, the reason why I'm such a fan of options is because if you really think about it, and this of course is my opinion, that the most of the market participants that trade options, think about options, specifically formulate a buy and sell decision in options, are not focused on the right information. Don't forget, right, the majority of active traders lose money. Now, we have to define the word active, right? But if you think about how options are priced, when you open up an options, let's say you open up an account to trade options, just about any broker has a trading platform that offers us these pricing models, meaning you'll say, okay, here's the position I'm thinking of, here's the position I want to put on, and if I do that, what are the chances that it's going to work out? Most trading platforms have that these days. And people, add into that volatility and all these other things, right? Price, time, volatility. These are all different things that go into making a decision to buy or sell options and where to buy and sell them. However, what became very, very clear to me many, many years ago is that there's one big thing, one big important thing that none of these options pricing models and most people's options buy and sell decisions don't take into account. What is that? What do you think that is? It's certainly not a part of the pricing models on all the trading platforms. And it's also something that most option traders don't consider. And that would be supply and demand. Now, how do I know that? Because if you look at, when you think about, and if you don't know options, probably half of what I'm saying doesn't mean anything to you, and that's okay. I would encourage everyone to get at least familiar with the basics of options. And you don't need to pay anyone to teach you that. There are plenty of great free tutorials on the basics of options. But be careful taking that information too far because, again, it's as we know, right? If you've been in these webinars for a while, you see it's all about supply and demand, right? When it comes to, there's nothing you can trade where you don't, and a lot of people, let me say it this way, a lot of people come to the options market for two reasons. One of two reasons or both. One of them is because options are relatively cheap to get involved with. Instead of having to come up with all of the money to buy the underlying stock, for example, you only need a fraction of that to buy the right to own the stock, meaning to buy a call. So the barrier to entry when it comes to cost and the amount of money you need in your account, certainly a lot of people come to options for that benefit. The second one, which is very much not true and a myth, is that a lot of people come to the options market because there's many people out there that promote and say, well, you have you don't need to know where the markets are going to turn and don't need to know where they're going to move, right? Meaning there's a whole set of non-directional strategies when it comes to options that makes options unique to a certain degree, right? There are strategies where you don't really need price to move, but to think that there are any strategies that are truly 100% non-directional, meaning you don't need to have an idea where price turns and where it moves to doesn't matter, there's no market like that. That doesn't exist. So no one really polices the marketing around options trading or Forex trading or other trading for that matter enough. There's certainly the kind of marketing police out there, but nowhere near enough. So you have to be careful. You have to be really careful. But to think that you can come to a new asset class and you don't have to have at least some idea of where price is going to turn and where it's going to move to, that's just not true, right? You can't get away from that. And if that were true, everybody would be trading that market and everybody be making money. Now, let me point your eye to, here's why. Let's go to the SPY. This is the ETF for the S&P. Now, does everybody know what strike price is? Actually, how many people in our group today really know nothing about options? How many people in our group today know nothing about options? And it's okay. That's you. It's actually probably a good thing. Okay. So Ribbons, you trade options, okay. So then you'll kind of understand this next part, right? So how can I be pretty sure that supply and demand is not a part of an options trader's decisions, is not a part of the options pricing models, right? All right, good, Chris. So you see this 392 to 396 supply zone in the S&P? Well, now think about all of the available strikes to buy and sell here. 390, 91, 92, 93, say 390 all the way up to 400. Well, when you look at the difference, okay, in price between the 390 and the 391, and then you look at that same difference in price between the 391 and 392, you're going to see that the change in price is pretty constant, right? But what you'll see is it remains constant all the way up, okay? But where that is fine between 390 and 391, what about 392 to 396? Right? What about all of these strikes in here? In other words, when you look at the difference between, say, a 385 and 390, and then the 390 to the 395, if you look at an options pricing model, that's no different than a 370 to a 375 to a 375 to a 380. The pricing model doesn't look at those as any different. The pricing model doesn't know that this is here. And that's the big advantage of combining options with supply and demand strategy. Does that make sense for you options traders? Do you understand what I'm talking about? We should see a big difference when it comes to the pricing of anything 392 to 396, but we don't. Right? Does that make sense? When price moved up like it did over here, when you looked at the pricing of those strikes, you wouldn't notice anything. Nothing would jump out at you, right? Obviously, the strikes are going to be the prices are going to be different as price goes up, of course. But there shouldn't be. But it should be very different when you get up from from say 392 to 397. It's not. It's not at all. Okay. Now, down here, I can tell you I sold puts and bought some calls. Okay. Remember we talked about the 351 in our FX Street sessions a few times? I'm pretty sure we must have covered this. This is our first outside the range demand zone. But anyway, why would someone buy a put here or sell a call? They would only do that if they thought price was likely to go lower, right? Or they wouldn't know that the demand zone is here. Does that make sense? I don't want to get too deep into this part of it, but in my mind, this is one of the rare opportunities that is still left like this in the financial markets. It's almost 2023. Technology and has advanced so far, and you have just high-speed supercomputers and Ivy League computer programmers. Yet the technology and the Ivy League computer programmers, when it comes to options, have only made, in my mind, what we're talking about here even stronger, right? Because they don't know that the supply-demand zone is there. So that's one reason why you might want to get involved in options, or at least start to think about it, the basics. Okay. And all right. So once you get the basics down, the actions of what we do at demand zones, what we do at supply zones are, I think you'll understand that. You can always ask questions. Now, the other thing to talk about before we get into the actual kind of charts in zones, by the way, for any of you that have attended that workshop, I'll put the link in the chat again. This is a free workshop if you want to attend it. Um, you're probably familiar with our structure location analysis, right? Supply, demand, fair value, structure, location analysis. So many options traders have sort of come to the program, come to the workshops, for example. And one of the common themes for people that start to understand, I'm saying for people that are already trading options, so people that are already trading options that start to understand supply and demand and incorporate supply and demand into their options trading. One of the common themes among that group after a little while is that before they were doing spreads and many different types of spreads, right? Spreading and spreading and spreading. But the more they understood supply and demand, the less spreads they did. The more just outright buying and selling of puts and calls they did. Does that make sense? Right, exactly, Stuart. That's what I'm saying. In other words, I guess another way to say it is the more that you understand the bet, the less you have to hedge your bet. Right. Stuart, it's like our brains are completely in sync at the moment. We're saying the same thing. That's funny. Okay. So now at the supply zone here, what could we do? A lot of your conventional option trader might say, do a credit spread. In other words, sell a call here and buy a call just a little bit higher. For the most part, I wouldn't be interested in doing that. In fact, I don't do that. Instead, if the profit zone, let's say the profit zone is all the way down to the 351 here, right? And it's not. There's a demand zone up in here, but let's say it is. What I prefer to do is buy the out of the money put for a couple reasons. Yes. So number one, when prices at or near supply, volatility is relatively low, right? I say relatively low there. And if price turns at supply, volatility will go up. That'll help the option that we own. And by doing the out of the money put at a price level that is in between supply and demand, we you almost don't even need price to get back to your strike. I mean, often it will, but you don't even need that, right? Because again, at the end of the day, this is all about risk and reward, return on investment, right? A lot of people don't think in those terms when it comes to trading their accounts, but at the end of the day, again, that's the most important thing. I can only go so deep with options here in this session just because, again, going too far, it wouldn't be fair to our members and to our team. Do have to protect the edge a little bit. So Stuart, that's probably one of the number one questions of options traders is, right, time. How much time do I buy? How much time do I sell? We have a very rule-based way that we make that decision. So if you're expecting price to come down, I'll give you some of it here though. If you're expecting price to move from supply to demand, well, how long did it take to get to supply? Right? We'd expect that move down to happen quicker than this, okay? And maybe I'll just leave it at that. And then we have our rules to whether we add time or decrease time based on whether we're buying or selling. But look at that when you're deciding on time, if that makes sense. Again, I could spend all day, all week talking about options, but there's only so far we can go. Obviously it wouldn't be fair to members and all that. But options are a fantastic market. Make sure you spend the time learning the basics. That's the key. understanding the risk reward at a basic level. That's very important. And again, you don't need to pay anybody to learn that stuff. There's plenty of great free tutorials on the internet, right? So the strategies are the strategies. It's where you, it's what strategy you use and what price point you are putting those strategies on. That's where the edge is. That's where the important stuff is. Does that make sense? Having said that, let's go look at some supply-demand zones. And I also want to look at the euro. All right, if we take a look at the euro, I believe there's a demand zone we're getting closer to, probably on a 30-minute chart here. We'll see it. Still a little ways away. We just touched the 99.97, but because we just touched it, right, that suggests that there's a still a significant supply-demand imbalance here on the supply side, so we'd expect price to turn there again. And then, of course, down here, the 97 area, that's a fresh zone. Both of these, both the supply and demand zone are inside the range. So for those of you that have been to the workshop, you know that's lower. Those are lower probability zones. Okay. And let's keep going though. So those are the smaller time frame areas. Let's get to the larger time frame stuff. So we've been watching the this area right up here, just above these pivot highs. You can see we just touched this area, again suggesting there's probably a big supply-demand imbalance up here. So if we do get up here, we would expect another move lower. And let me just go here for a moment. So this is just a larger time frame, but even if we do get a big rally in the euro, right, the dollar comes down, we'd still expect the euro to move lower. And that's probably how things are going to be for the the coming months. If anybody has another market they want to take a look at, though, just put it in the chat. We can take a look, and it doesn't matter. We apply the strategy the same to any and all markets. As long as we have a feed for it, we can look at it. Yep, we can look at those. I assume you're saying oil and the NASDAQ? We can definitely take a look at the NASDAQ. And let's go over to that market. So we'll look at the NASDAQ futures, and then we'll look at the QQQ, the ETF for the NASDAQ. Okay. And it's actually probably better to just go right to the Qs, because we're looking at this 30-minute demand zone, but it never actually became a qualified zone. So you see this zone right here. So we're looking at this morning. This is a footprint left from Friday, but we really needed price to take out this larger time frame supply zone, because the distance from the demand zone to the supply zone was so small. So that's one of the big things that qualifies a zone for us, is that profit zone. If we don't have at least a profit zone of 3%, we don't take the trading opportunity. No matter how good the supply or demand zone is, if we don't have a profit zone of at least 3%, we don't take it. Now, if the NASDAQ this is a Fed week, so we could get a nice big rally this week as well. We'll see. But watch the 297. area above. And then, of course, we have the outside the range demand zone down here, and then another outside the range. This is like 3 Thursdays ago now, but 2 or 3 Thursdays ago. But you have the next outside the range demand zone there. And right there it is again. So there's 247.80 on the downside. The NASDAQ is the weaker of the equity index market. Yeah, the NASDAQ is the weakest and the Dow is the strongest for sure. So the Dow, yeah. And if we go to the Dow ETF, yeah, we've just had strong rallies from the demand zones, and we don't even have qualified supply zones till a little bit higher. I believe we did just come into one. Well, here we have this one developing. So a blue circle also means that this is not a qualified supply zone yet. If we can take out the near-term demand zone, this will become a supply zone, but it's not yet. Let's go over to the ETF for the Dow, and then we'll go to oil. Okay. So the demand zone below current price that we're focused on here, the qualified demand zone in the Dow, is the 324. This is the Dow ETF. This is where the Dow ETF is trading right now. Okay, but we still have to get down there. On the supply side, yeah, all the good stuff is still quite a bit higher in the Dow. So we really have not had any near-term supply zones. The Dow is just, again, the Dow has been strongest, but the profit zone told us to expect that, right? So let's take a look at, let's go to oil. So oil here, really you can see everything. It's all on the 60-minute chart. So these are zones we've gone. If any of you that have been in our sessions, these are the zones we've been going over. Okay. Yeah, the new developing zones I see in the chat there. Yeah, the only reason why they're what needs to happen for them to be qualified supplier demand zones is we need a profit zone with them for us to take them. Structure-wise, they might be fine, but location, if they're too close to the middle, right? Everything is about identifying the middle, fair value, and then finding our supply demand zones away from that. That's the whole strategy. So oil right now is kind of sitting in between our overnight. That's what the gray circle means, overnight demand and supply zones there. However, price just touched both sides, so we'd expect prices to turn again at both of those zones. Because again, there was just one touch there. Okay. Other than that, there's really not much to talk about in oil. Yeah, because you see how we're kind of right in the middle here? Okay, no worries. Yeah, so price is kind of right in the middle there. Let's go over to the dollar. The dollar is just so key to so many markets. So let's go take a look at that. When it comes to, we use the dollar as an inverse market, obviously to a number of Forex markets, but it's also an inverse market to equity index markets, right? Stock markets, when they're at opposing supplier demand zones at or around the same time. Has a big impact on the energy and metal markets, right? So we're constantly focused on the dollar, almost more. Even when we trade, equity index options, we're equally focused on the dollar to make those decisions. So here on the dollar, you'll see in the one of the reasons why the stock markets are pushing a little bit lower is the dollar is in kind of rally mode here, right? Moving from this demand zone up to the supply zone. So we'll watch the 111.85. We're not there yet, about 30 cents to go, but looks like the dollar's on the way. then we have the 110.60 demand zone sitting just below. This is all seen pretty good on the 420-minute chart. That's almost a daily chart, so don't get hung up on the exact number. So there is 110, yeah. So we do move lower. Oh, that's a very tested zone already. Okay. So yeah, so we'll stick with these right here. And then on the 30-minute chart, I believe we have a supply zone coming up. Oh, that one's going to be higher. Never mind. All right. In the whole big picture, right, we've gone over these zones a lot in our sessions. But there's that, you know, that 110 area sitting below. We've gone over that. And then everything that's sitting just above 115. But we're nowhere near either of those. Okay. Gold, yep. Oh, yep, we could definitely take a look at gold. Same thing in gold, possible larger time frame supply zone developing. And that's actually a very big deal if that does develop, right, for equities and everything. But let's leave that alone and let it do its thing. So we don't want to, can't force anything. Coming down here to the 15-minute chart, you'll see we're sitting just above a qualified demand zone down here at 1635. Almost got there a little while ago, a couple hours ago, but it didn't. So that level is still in play. Those are the gold futures. And then, believe it or not, there's a little 5-minute supply zone a little ways higher, 1661. We usually don't look at this small a time frame in these sessions, but that zone is up there. And then if you can also take a look at GLD, which is the ETF for gold, trading at 152.63 at the moment. And I believe we have a, let's see how far we are. So we're not really near any quality zones at the moment, right? If you look at, you see this range here, we need to get out of that range to get to any good zones. So we wouldn't spend a lot of time here. Over here to this chart, if we do get outside of the range, so there's a drop base rally with a gap, 149.50 demand zone sitting below. But notice how it's outside the range. So that is key. All right, there's that one. And then, so I'll throw this up again. I know some people came late, but throw the link in the chat. So if you do, if you want to take a deeper dive into the original supply demand strategy, the structure location analysis, and all that, applying it to stocks, futures, forex, options, crypto, bonds, real estate, commodities, anything, energies, metals. You can always come to the free workshop if you like. Good to spend time with you. And oh yeah, I see your question in the chat there as far as, well, a couple of them. So Stuart, we look at both. We always look at both. In fact, we'll start with the Qs and then look at the futures second, but we'll certainly get more information. Obviously, the Qs are going to be cleaner, but we're going to get more information off the futures. Then your question about elaborate on the identifying the supply demand zones. So we have I would definitely suggest you come to the workshop for that. Again, it's a free workshop, or you can go back and watch some of the older videos. It's more than a 5-minute conversation. You know what I mean? And the purpose of today's session here was to talk a little bit about options. We can't go too deep into options here because, number one, not everybody understands options, and number two, you have to protect the edge a little bit. So, but hopefully the information we did go over was helpful. It's always a fine balance. And as always, just make sure you're very careful and understand the risk reward in all of this, because the majority of active traders do lose money. Okay. Great to trade them if you can read a chart. Yes, if you can't read a chart, I would suggest don't trade them because you're very likely to lose money. All right, have a great rest of your day, everyone, and we will see you next time.